friends, it's Doll here, and I'm sitting here with DenaliGuide, or Nick, today, as many of you know him, as DenaliGuide, to talk about what he's watching in the markets right now. His latest letter outlines some opportunities for the month of March, but more importantly, some of the lessons learned from decades in the market. So you can tell Nick is actively working here. Let's cut to the chase. If someone wanted, say hi first.
Hey.
Hi. So if somebody wanted to
Good day, everybody.
understand where the potential opportunities might be right now, where would you be looking?
Well, we know that gold is a heavy hitter, and it'll always be, in my view. Number two, silver looks like a lot of fun. The merry widow of the precious metals, the wild card. But what I'm looking at, as far as I consider solidity, is copper. Okay? We already just saw oil just go nuts because of the world situation. So oil's still on my menu. So that's what I've got.
So you've often said to plan your profits first. And you also said something about this in one of your letters. You talked about planning what you'll do with the profits before you even make them. Why is that important?
Well, first of all, you have to have a plan. Second of all, your plan must have an objective. The objective could be a dollar number, or it could be something. Do you want a small cottage in the woods? Do you want to go to a lake somewhere? What's it going to cost? So you have to figure out, when you're making money and you're taking profits, where you're going to engage those profits. I wouldn't have any problem buying an industrial amount of copper, if that was the case, where I thought it would preserve my purchasing power.
You also mentioned what you called some of the dirty tricks of the trade. What should investors understand about how markets actually work?
Well, you're sitting there with 300 shares of the copper ETF, and you go tune back in the afternoon, and you don't have any. What happened? Well, you set a stop loss, and the stop loss was probably $2 or $3 below where you got it. There's a thing called an intraday price, and the intraday price can go, when the open starts, it can go anywhere. It can go high, it can go low. So the people who know that you have set in a stop loss at $2 under the market, and it goes $2.50 under the market. Bang, it's sold, and the market maker just got cheap stock at your expense, and you got a loss and a commission. That's one of the dirtiest tricks of them all. There's other ones like bankruptcy and what have you, but this is the one you have to look out for.
So how do you avoid the trap? What can people do to protect themselves from a trap?
Pretty simple. You know a secret can only be kept by one person. Two people make a secret a conspiracy. Well, as far as that's concerned, you keep your mental stop loss in your head. That's way number one. Way number two is you have a brokerage company that allows you to put it directly in their computer. When the stock hits that price, it's thrown to the exchange floor and it's sold at market. But nobody else knows.
So you don't like telling the market where you're going to sell.
I don't want to tell them what I'm doing. It's like,
Yeah.
Oh, hey, I'm over here. Okay, kick me.
So let's look at some personal strategy here. You've been in the markets a very long time. How do you approach investing personally?
Well, I try to look at it in terms of sector. Crazy Jim Cramer said, and I think it's true, 80% of what a stock does depends on its sector. Right now, the oil sector is going crazy. The copper sector is waking up. The heavy hitter gold and silver, they're great, but you have to take a choice. Are you selecting one miner? Are you selecting a developer? Or do you want to use an ETF for that sector? You can use a copper sector ETF, any number of oil sector ETFs, a lot of gold ETFs and silver, but not so many minor ETFs. Why do I like it? Because when you have an ETF, you might have 8 companies in it, you might have 40 companies in it. You have some stability.
Okay. I like it. You wrote down here, I think of it like a bowl of M&Ms, all the different colors, but they're all M&Ms.
Yeah, you're scooping. So if you get a copper ETF, you get somebody that is in Chile, you get somebody that's in Canada, you get somebody that's in Montana, and you get somebody that's in Arizona. And they vary in their size and in their management philosophies. It is probably the best form of diversification I can find.
Okay. That makes sense. So if there's somebody watching this today and they're just beginning their investment journey, what advice would you give them?
Have a plan.
Okay.
All right. Do your own due diligence.
Oh, yeah.
Keep your own counsel. A secret can be kept by one person. Keep that in mind. Now, you have an objective and you're going to take profits. That's your attitude. You're also going to protect yourself. So the bottom line is, once you begin to take profits, what do you do with those profits? Do you have such a small portfolio you have to plow it back in? Do you have dividends coming to you that you reinvest? Or do you take what you earn, let's say from Phillips Petroleum, and do you put it into your little cottage in the woods?
Okay. One of the things that you mentioned was that if your strategy is keeping you awake at night, you're probably doing something wrong. Can you expand?
Oh,
Excuse me.
wow. First of all, you have to write out your strategy. You have to know what that plan is. I'm holding this stock for a long term. I want to catch a lot of dividends. I'm holding this stock for a short play. Let's say I got it at 21. I'm going to sell it at 28, but I'm not telling anybody that. Okay? And when I sell it at 28, I'm going to take my capital gains and I'm going to put most of it back in to that stock, but I'm also going to take the capital gains and put it into another stock. I'm self-diversifying.
Okay. Thank you so much. So, yeah, thank you for sharing your thoughts with all of us today. For those who want more of Nick's market commentary, you can follow the DenaliGuide letters and updates and the blog, and soon more consistently on Substack. So stay tuned for that. And remember, in markets, as in life, it always helps to have a plan.
DYOD.
Do your own due diligence. Thanks for watching, friends, and we'll see you in the next one. Say goodbye, Nick.
See you guys.
Bye.